Welcome to the Byte-Size Brief. Today we are putting MicroStrategy, that's MSTR, completely under the microscope. Let's get into it.
Absolutely.
Our mission today is to analyze the completely wild 2026 trajectory of this company. They have officially rebranded themselves as a Bitcoin investment company.
Right, yeah.
They even just refer to themselves as strategy in their marketing now. And they've completely moved away from their legacy identity as, a sleepy business intelligence software provider.
Yeah, the transformation is just unprecedented in modern corporate history. And for the listener tuning in, evaluating MSTR is really no longer about evaluating software sales.
Right.
It's about understanding a highly leveraged digital capital treasury.
Okay, I hear that, and I see the massive numbers flashing across the financial networks, but I have to ask this from the retail perspective. Look at the sheer volume and aggression of their moves. Is MSTR a visionary pioneer for the everyday investor, or just a dangerous debt-fueled roller coaster?
That is the multi-billion-dollar question, honestly. To evaluate whether this is visionary or just reckless, we have to isolate the actual mechanics of what they're doing.
Yeah.
We need to look at how they fund these purchases and examine the extreme volatility that is structurally baked into their entire business model.
Okay, so compared to last quarter, what actually moved the needle here?
Well, let's look back at the brutal reality check they faced in late 2025 and early 2026. The broader crypto market experienced this sharp 25% retracement in the price of Bitcoin.
Right, the big dip.
Exactly. And because MSTR operates as a leveraged proxy for Bitcoin, that drop hit their equity incredibly hard. During the first week of February 2026, MSTR stock cratered 17% in a single week.
Ouch. A 17% drop in 5 days. That triggers emergency board meetings at a normal company.
It creates sheer panic, yeah.
Yeah.
Especially when you look at the accounting fallout. Because of the new FASB fair value accounting rules, MSTR had to report a staggering $12.4 billion paper loss for the fourth quarter of 2025.
Wait, $12.4 billion?
Yes!
Just to be clear for everyone, that isn't cash flying out the window, right? That's an unrealized loss based entirely on the spot price of Bitcoin at the close of the quarter.
Exactly. But that mark-to-market accounting creates violent swings on their financials. And the psychological fallout was very real. Their net asset value premium completely inverted.
Oh, wow.
Yeah, by February 2026, it hit a massive discount. They were trading at just 0.85 times their market net asset value.
Which feels like the stock market offering you a dollar bill for 85 cents.
Basically, yeah.
But fast forward to right now, April 2026, and the energy has entirely flipped.
Yeah.
Bitcoin rallied past $77,000, and MSTR aggressively capitalized on
They
it.
definitely did.
Just last week, they executed a purchase of another 13,927 Bitcoin at an average price of $71,902. They just don't stop.
They really don't. And the current numbers are staggering. As of right now, MSTR holds 780,897 Bitcoin.
Insane.
And they have a total cost basis of roughly $59.02 billion.
$59 billion. That is wild.
And the market reaction is explosive. Just look at the April 20th data. Options trading volume went parabolic with 99.4 million contracts traded.
Nearly 100 million contracts.
Yes. But I have to point out the structural warning signs here. With this influx of speculative capital, the stock's relative strength index, or RSI, is sitting in the 70s.
They're getting hot.
Very hot. When you combine an RSI in the 70s with a 60-month beta of 3.55, the stock is officially in overbought territory. It's highly sensitive to any pullback.
Hold on, how does that actually affect MSTR's stock price for regular investors like me? If they hold $59 billion in assets, why was their market cap lagging behind at $48 billion just a few months ago?
The answer is on the right side of their balance sheet. It's the debt load.
Okay.
Institutional analysts don't just look at gross assets, they look at enterprise value. You have to subtract the massive liabilities MSTR has taken on to fund these purchases.
Right, because they aren't using operating cash flow from selling software to buy all this Bitcoin.
No, not at all. They are engineering complex credit instruments. And this brings us to Michael Saylor's 2026 keynote concept of digital credit.
Oh, right, the keynote.
Yeah. MSTR isn't taking out standard bank loans. They are issuing variable preferred stock under the ticker symbol STRC.
Let's unpack this. What exactly is STRC?
Mechanically, MSTR strips the extreme volatility of Bitcoin away for the credit investor. If you buy STRC, they offer you a targeted, predictable yield of around 11%.
11%.
Yeah, and it's structured as a tax-deferred return of capital. Meanwhile, the everyday investors holding the common MSTR stock absorb the excess volatility and potential upside.
So basically, it's kind of like taking out a massive mortgage on a wildly volatile mansion, but renting out the guest house for a guaranteed 11% yield.
That's actually a great way to think about it. But here's the risk. If the mansion loses its value, those renters still legally demand their 11% yield.
Right, they still want their money.
Exactly. MSTR is sitting on $8.2 billion in senior convertible notes. They are creating a massive fixed cash obligation. If Bitcoin stagnates, they still have to pay up,
Wow.
which is exactly why they just had to establish a $1.44 billion cash reserve.
Just to pay the interest.
Just to cover 12 months of dividends and interest. When you compare this to the broader traditional credit market, or even look at something like BlackRock ETFs where you have pure spot exposure.
Right, but what does all that actually mean for MSTR investors?
Yeah.
We aren't really looking at the broader credit market today. If their cash reserve only covers a year, how are they keeping the engine running?
Well, they rely heavily on at-the-market, or ATM, equity issuance.
Printing shares.
Yes, printing new shares to buy more Bitcoin. And this is the most controversial part of their playbook.
It is an absolute war zone on the retail forums right now.
Yeah.
I mean, you go on Reddit, and the bears are aggressively calling this a dilution engine or even a Ponzi scheme.
I've seen that, yeah.
But then the bulls argue that as long as the Bitcoin yield, the actual BNDC per share goes up, it's a genius move.
The bulls are focusing entirely on that key performance indicator. And objectively, MSTR has executed on it. In 2025, their Bitcoin yield hit 22.8%.
That's a solid number.
It is. MSTR currently holds roughly 205,812 Satoshis per share.
And for anyone who doesn't know, a Satoshi is just the smallest fractional unit of a Bitcoin.
Right. But there are major institutional headwinds threatening this strategy. For instance, MSCI might reclassify MSTR from a software company to a digital asset vehicle.
Why does that matter?
Because it could force passive index funds to sell off the stock entirely. Their algorithms would just automatically dump it based on the new category.
Oh, wow. So forced selling.
Massive forced selling. Plus, there is an 11.08% short interest on the stock right now. The market is heavily betting against their ability to maintain this premium.
But here's the crazy part to me. Despite all that debt, the dilution, the short sellers, there's this weird valuation paradox.
It's DCF model.
Yes. I saw this recent two-stage discounted cash flow model that actually suggests MSTR is deeply undervalued at its recent $143.54 share price.
Yeah, that model is fascinating. It forecasts a recovery in their legacy software business, projecting massive cash flows by 2035 to actually help service this debt.
Okay, so let me throw this at you, thinking about the long-term play here. MSTR's CFO recently said we're only in the second or third inning of adoption.
He did.
So if big banks are just starting to lend against and custody crypto, is this relentless dilution actually MSTR's genius way to front-run Wall Street before the big money fully arrives?
That is the ultimate crossroads for MSTR. It is an entirely unprecedented financial experiment.
Yeah.
It offers investors amplified, leveraged exposure to digital capital, which is great in a bull market. But it carries the heavy baggage of perpetual dilution, a massive debt load, and extreme sensitivity to broader macroeconomic tides.
It's just a totally wild ride. All right, listeners, what's your take on the future of MSTR? Are you bullish, bearish, or sitting on the fence? Let us know in the comments. See you next time on the Byte-Size Brief.